Hey everyone, it's Evan here from the Trade Risk on Tuesday, April 24th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump right into the charts here. There's lots going on today, so let's not delay. We're going to look at the S&P 500. That's the chart we're looking at right now, the cash market, and we're looking at a weekly time frame. So each bar on this chart represents exactly 1 week worth of trading. So here we are. It's Tuesday, 1.79%. That's how much we are down in the S&P 500, about 48 handles here. And you can see this is at starting to come into a very important, critical, long-term level of support. So what we have going on so far early in this week, and mostly from today, is a sell-off here across stocks, and we are getting that follow through to last week's reversal. If you recall from our video last Friday, our weekend recap that we did, we discussed this big tail up here, this reversal, and we essentially left it saying, look, we need to see if we can get some confirmation lower. If you're a bear here, if you're a seller here, you want to see expansion to the downside, you want to see the selling continue into next week. And so far, we are getting exactly that script right now as markets are continuing to the downside. And looking at this S&P 500, we are once again back to discussing and thinking about this long-term trend line that extends from the 2016 lows, as it is once again back in picture here and looks like it is destined to be tested for call it a third time, you could say a fourth time, depending on how you want to draw this. But the point is we have a very critical sort of level going on here right around, arguably still another 20 handles or so before things get really dicey. But when we start to break underneath that 2600, that's when we need to be pretty cautious here, even for the longer term perspective, to prevent further technical damage and a washout, beyond the lows that we've already seen for 2018. So we're getting that follow through. We see the fast moving averages here on this weekly time frame, the 8 and 20 period moving averages starting to bearishly cross down this time. You could see even prior over here, they never really made the cross down. They got very close. They overlapped with each other, maybe a slight cross right there. But now we're actually seeing some distance in here between the 8 period and the 20 period. So we want to see how this weekly candle closes. That's going to be very important here. Can the bulls step in again? Can buyers step in again here and defend this lower 2600 level? If we can rally up and repair the look of this weekly close here into Friday's session, that's going to be very important for the bull case. So as of now, sellers have some momentum behind their back. It's only Tuesday, but there's plenty of catalysts. We got earnings. We got a lot of earnings to go through this week. So there's plenty of reasons and excuses for the market to move. And, I think it's going to be, a pretty fun week in terms of catalysts and headline risk into the rest of this week. So that is the big picture here. I'd be paying attention to 2600, really the lows here from the 13th, April 13th, which comes in 2610 or so. If we start losing this cluster of lows here, and the daily chart's going to have a little more refined levels we can look at, that's when things get pretty ugly for the bull case. So here we are. Here is the daily chart now of the S&P 500. We'll go to the SPY ETF. When we look here at the daily chart, we'll switch over to the other board. And again, you can see today was where the range expansion came in. We saw a slight uptick in volume here, and markets sold off and broke below this 266 level. This was the level we mentioned many times in our recaps over here as a important sort of ceiling, as a important ceiling of resistance that the market was struggling to break above on a number of attempts, really starting from all the way back here on the 27th, then again here on the 5th, Then again here on the 12th, we never got that close. We didn't get the close above it on the 13th. And it wasn't until early last week when we started with this gap up and we finally broke above this 266 level, and we had a few days above it all the way up to about 270. And then the rollover, the pullback here started to ensue. And on Friday's video, on the weekend video, we talked about on Friday the break of this trend line here, and we mentioned how this 266 level was the point to pay attention to coming into this week. We broke the acceleration, the ascent of this rally, but now we were looking to see if prior resistance was going to turn into support at 266. It certainly tried here for the lows of Friday. We bounced off 266. The lows yesterday on Monday, we briefly undercut Friday's lows, but then we had this nice bounce up into the close yesterday. And then today we started with this gap higher. We had a slew of sort of earnings releases yesterday. Most of them, seemingly on the surface anyway, seem to be fairly encouraging reports in terms of top-line numbers, EPS, and general guidance. But the market, even despite some decent numbers out there, and there were some mixed bags, but the market just could not hold on to gains today. We started off positive on the session and then proceeded to break down through the prior day's lows through 266. It looks like we got the gap fill over here back from the 9th accomplished. So, that's a target there that I think some were looking at. So we did get that gap fill more or less anyway, and we got a little bit of a rally here off of the lows. But when I look at this chart, we get this trend line break and we have this loss of 266. So to me, as I look at this as a short-term kind of we'll call it just short-term trader or market structure here, I do not want to get too excited on the long side until we are back above 266. That's really the level I want to see this market get back above, and until it does, I think we need to be cautious here. We got the 8 and 20 daily EMAs here about to cross under. We have a break of support. We have a break of trend line here, and we have an uptick in volume on this day. So range expansion, uptick in volume, breakthrough support. I think all of those reasons suggest some caution here in the short term. It does not mean we can't bounce here. We could easily see some type of recovery relief tomorrow, but really I'd want to see getting closes back above 266 for the bulls to be back in sort of a convincing, stronger structural price action perspective. We also have the S&P 500, which is down the fourth day in the row, 4 days consecutive down in a row here for the SPY. So again, tough to chase this on a new shorting, new shorts coming in here. And I do think, that we, to some extent, on these 4 days lower here in a row, we do have a bit of some extension here in the short term. So again, maybe a little bit of a relief rally back up to 265 or retest 266, and then that'll be the decision point come the end of the week. Can the markets reclaim 266 throughout all the earnings that we're going to go through and the damage that we saw from early this week? And if we do reclaim 266 by Friday, I think that is actually as pessimistic as I sound right now. If we could reclaim 266 by the end of this week throughout earnings and throughout this starting weakness, I do think that would be an encouraging sign. But I'm certainly not going to really front run it. I want to see the market prove that it could actually reclaim 266. That's at least the way I'm looking at it. And as far as downside risk goes, we're back in this range here. So really, risk to me opens all the way back up to the bottom end of this range here around 257, 258 or so. And if for some reason the market comes cratering down through that, we once again get a very dicey scenario. But that is many steps ahead of us for now. Let's focus on the near term. Let's see how the market handles the next couple of days here. Can we get back up and retest and reclaim 266? If so, that's encouraging. If not, then again, 258 or so on the downside is what risk would be to me in the short term. So that is the S&P 500. Let's go to the IWM, which continues to be the most resilient here. This picture is much more healthy. We did break this trend line late last week, or on Friday again, the trend line of ascent here to the upside starting from the beginning of April. But notice we are still holding above a 20-period EMA here. So when you think about this type of move here in the IWM, what you could really say is, look, this move started here at the very beginning of April. It started down around 147, 147 and change, and it got all the way up to about 158, so a little over 10 points, and here we are just about retraced 40% of that at today's lows. So from a pullback perspective, the IWM is pretty darn healthy. This is actually pretty normal behavior here. You get this nice move higher. A 40% pullback is totally reasonable. The problem is when we look at the next chart, is the NASDAQ 100 is pulling back much deeper, and the S&P 500 a little bit deeper than this as well. This is still arguably holding above support here as well. So it's holding the 20 period. It's holding around this 154.50 level, which has been a confluence area for the past several months. So IWM, best in class still. Let's pay attention to it. If it continues to hold and stay resilient and try to lead us to the upside, maybe all we need is the NASDAQ to catch its footing. Let's go to the NASDAQ now, which is, again, when we look at the retracement here, we can see how much deeper this one has already come. At the lows today, we had retraced about 70%, maybe even a little bit more than that, of this move. So that's a much deeper, more concerning retracement, and it's coming on high volume, and it's breaking through support, and it's below all the moving averages. So again, the cues here, very clearly the laggard and what's dragging down the market started with semiconductors last week, and now it's kind of spilling over to tech more broadly. So this is the concerning area right now, is the cues, and the IWM is the bright spot. So again, we ask ourselves, which will win out here? Can the IWM stay resilient enough and hold up and help lead this market and sturdy this market up, or will the cues end up kind of dragging everything down with it? The SPY is kind of left here in the middle, not doing a whole lot wrong yet, but certainly broken below the short-term level, which puts it in that caution mode. So that's sort of the mixed signals market that we're seeing right now. I think at this point, the sellers now have a little more strength and edge tipped in their favor. Let us see how we get through these earnings and finish out the week. So that is the market environment. Let's get to some other majors now. We'll go to TLT next, which is continuing lower. Last week I had this this breakdown week here, minus 2%, breaking below this trend line that has been holding it up since mid-February, and we are now getting continuation lower. We're down 43 basis points, almost 0.5% this week, and this kind of gap and slide lower is continuing. It seems like this 117, the lows from February, are on deck to be tested. We are stretched here to the downside, but again, lots of momentum in the seller's favor right now, so it's tough to want to try and pick a bottom or really dip by this at this time. I do think this 117 level is probably something we'll see tested over the next week or so. So that's TLT. Next, if we go to GLD, had a recovery today, but still down on the week. It had this rough start to the week here on Monday, had this 80 basis point, almost 1% move lower, a real thrust off of the highs here. Gold, as we've been mentioning, is still consolidating in this longer term pattern. Looked encouraging a few times up here as it got up to this 128, but just could not get any strong closes north of 128, and has proceeded to kind of sell off back in down towards the lower end of this range. So for now, it's a big messy picture here if you're trying to short-term trade this, but if you take a step back and you look at this weekly time frame, it's still very much just a sideways consolidation in between, call it 124 and 128, all the way up to maybe 129. So let it play around in that 5-point range. We're not seeing anything change structurally from that bigger picture. So, more time is needed for GLD. Silver, once again, this one here to start off the week, just a big setback here in terms of momentum. This had a nice breakout, good volume last week, breaking above this 5-6 week range, and here we are this week giving all of it right back and trying to muster up a little bit of buyer's commitment down here below 1575, but still just a pretty big setback there for silver after such a strong week on heavy volume. 2.3% is still what we're down right now. If we go back to the daily chart, we're at the 20 period EMA here. We're at more or less right around recent highs from March and early April. So if we can continue to hold above 1580, if we can continue to repair this damage into the end of the week, then maybe not all is lost, but certainly not a good start here for the silver bulls to start this week off. So hopefully we get some repair there if you're a silver bull into Friday. And then finally, if we go to oil, 1.72% was down today on a slight increase in volume. You can see it's down about 0.5% on the week here, and we got this nice potential kind of weekly double top action going on here, failing at this $14 level in the USO ETF last week at the highs, and now so far this week at the highs. So maybe this leads to some sort of short-term pullback, maybe another retest of the breakout level here from just a couple of weeks ago at around 1330. So keep that in mind. But for now, it's still holding up above these moving averages, but showing a little bit of reluctance to continue any further. Finally, natural gas here. It's actually a position that we put on here today in natural gas on the long side. We can see natural gas on the week so far is 1.55% to the upside. It's right back to last week's highs here. And a couple of things to notice, and some of the reasons, rationale of why we got long some natural gas today was from the recent uptick in volume here in UNG, mentioning that this market's been sleeping for a while, just consolidating, very small ranges, very light volume. You can see, in fact, the 20-period average volume's just been on the decline here. But notice over the past 4 or 5 days, mostly occurring here as it started to ramp back up, has been on, above average volume, and we're seeing some nice green volume coming in here as it retests these highs. Another thing to keep in mind with natural gas is, this is again an ETF, just like USO. It's an ETF that is trying to track the underlying futures market for natural gas. And what's happened here over the past several months is this ETF is not a perfectly tracking instrument, and there is some slippage here, and this chart does get skewed. But with today's action, even though it certainly is not the case on this ETF, this move today actually took out the March highs here. So the March highs that you see back in March 13th around 2330, we are above that. If you were to look at the futures market, which I don't think I can pull up here in TC2000, if you look at the continuous contract, we have rallied above, I believe the price is around 280, actually 282 probably, or 281 in natural gas, which is actually above this level here from March. So we topped out around 280 around March 13th, and then we've been kind of pulling back, moving sideways, and today we broke back above, I think, again, closing around 282 or so. So we do have sort of a breakout in motion here with an uptick in volume. Go ahead and look at that futures contract, go to Stock Charts or TradingView or some other platform, your broker. You can pull it up and see. So for those reasons, for those reasons of a breakout, we did get long some natural gas today. Stop losses in place. We'll see if this can continue to rise here. Do like the move above recent highs and that uptick in volume. So that covers everything that I have for this midweek video here. So again, thank you so much for watching. Every Tuesday and Friday, we put out these market recap videos. Subscribe on YouTube if you want to stay updated when the latest one gets posted. So thanks so much, and talk to you on Friday.